Good morning, good afternoon, and good evening to all of our crypto fans. You have your gracious crypto hosts, Robert Ridzak, Carlos Sendejas, and Matt Reed, here for another episode of the Deep Q Cast. Gentlemen, another early morning session. I had to whip out my fancy lamp here in front of my computer to make sure my face was glowing. Usually I can just use natural light, but we're doing it early today. Gentlemen,
Yes,
what
we
are we
are.
drinking? I like it. Okay, Carlos, I saw when you were doing the show notes, you had your little fancy Deep Q mug. I also have my
Boom.
double shot of oat
Double
milk.
double.
Yeah,
Yeah,
double.
I'm going old school with the fancy mushroom drink.
Oh, going back to it again. I got a free sample of that. It's been sitting in my drawer, and I keep on thinking like I need to try it, and I have not done it yet. You're going to
I
inspire
don't
me.
blame you for
I'm gonna do
not
it this
trying
week.
it, Rob. I think you're doing the right thing. Stay on the
Listen,
fence until you're
I make-
forced to.
I make no illusions that it's like delicious or that it's better than coffee. It's like when you're like I said, it's like when you're eating fake meat or something like that. No one has a black bean burger and says to themselves, "Oh,
This is better
this
than
is
the real
just
thing.
this is just as good as like a Wagyu beef burger." Not the same thing.
It's an acquired taste. It's an acquired
Gets the
taste.
job gets the job done though.
Did you ever drink decaf?
It's weird. I do not like decaf. I think it tastes disgusting to me.
Really? So you can taste the difference between decaf
I
and
think
regular?
you can without the
Really?
caffeine.
Yeah.
Interesting. I've never done a taste test before, but I was gonna say maybe you could put like a decaf and sprinkle in the mushrooms in there and just have it like the
Oh yeah.
yeah. Oh, it's like I mean, also you have two young kids at home, so I'm sure like sleep, it you could use a little bit of a jump start your day with some mushroom beverages.
Yeah. Makes the day certainly more trippy. We'll enjoy that.
It kicks in like an hour. Matt, What about you, buddy? What you got drinking today?
Just water for me.
Just water? Again, always staying hydrated over there, man. That's good.
Yeah.
That's good. I actually need to do that after this. Excellent. Boys, we got some pretty interesting news that come out. I know the biggest thing, right, is the ETH ETFs. Was a huge I think a pretty huge announcement. And then we had some interesting news on the BTC ETF front. A lot of stuff happening in the ETF land, It's kind of funny how in years past, like months past, people in general, when I would read through the Twitter sphere or the X sphere now, which sounds actually a lot better than Twitter sphere. When I was reading through the X sphere, a lot of folks were talking about they had not seen the possibility for these crypto ETF approvals for spot markets until after the election year, or at least no one suspected it for this year. And it seems like those odds have just increased dramatically. So it's been so fascinating to see how quickly this stuff has evolved, and the SEC obviously losing a lot of ground on a lot of different cases. It does feel like that the tide is turning a bit in crypto land.
Yeah,
I think you nailed
I've been
it.
following it a lot. I was going to ask, Mike Novogratz was published, I think it was in Investor Note. They reckon 6 months out is their forecast for when the first Bitcoin ETF will come through. And that's basically based on discussions they've had with like Invesco, BlackRock. That's kind of what their forecast is. I'm kind of curious what you think, having what you've read. If you think that's reasonable, or if you think it could be sooner or longer.
So there is a that's I think probably the conservative route. That route basically takes into consideration that the SEC takes exactly as long as it's supposed to take.
To delay everything out as far as
exactly
possible.
Like you punt it until the very last moment, and then at the very end it just gets approved because you don't do anything. ARK Investment, which is Cathie Wood's ETF firm, their Bitcoin ETF will get launched January 5th, if that's the case. And then I think it's like mid-Feb is when BlackRock will get that done. I suspect that the SEC will not take that route. And the reason why I don't think that they'll take that route is because, as we discussed previously, there is a court case coming out that should be ruled on, literally any day between now and, we'll call it September. where Grayscale is suing the SEC to turn their Grayscale Bitcoin Trust into an ETF. And a lot of the chatter that I'm hearing is basically that looks like it's a very, very, very high probability of a win for Grayscale. Particularly since the argument that the SEC is using to not approve it is effectively that they think there's lots of manipulation in the spot market. And Grayscale is basically making the argument that that's arbitrary and capricious, given the fact that they have already approved a futures ETF, and that the futures and the spot ETF are exactly the same market plus a little bit of funding, which is exactly true. So, I mean, I don't know how anybody who understands the way a futures work would say, oh yeah, no, the futures market is a good market, and the spot market of the underlying futures contract is, subject to manipulation, so therefore we can't approve the spot. Like it literally makes no sense. So that will likely get done, and I think that will then kind of force the SEC's hand to get it done quicker. So I've always thought that the sort of the game theoretics of this is that the SEC actually is suffering from a loss of political capital because they've been taking a lot of losses in the court. And I mean, if you just go to Gary Gensler's Twitter or X account, anytime he says anything, he just gets annihilated in the comments. So the thing to note about him also is that he's a very politically oriented person. He really, really wanted to be the next, Treasury Secretary. Like that's the role that he's been, lobbying for since like day one. So all of this stuff hurts him. All of this, I think they'd rather just put it behind them. So if they know they're going to take an L, I think they'd actually probably rather, front run that, not expend the political capital, and then just approve the ETF.
Just remind me, class, for the grayscale thing, is that a verdict shortly, like in the next couple of weeks, or is it just some kind of intermediary legal proceeding that they're just going to announce? And
so it is. This is with the U.S. District Court, and so the U.S. District Court is really like an appeals court, and the only next phase they could go is to take it to the Supreme Court. So this is, reasonably final. I believe, as with anything, they're going to lose the verdict, and I think they have like 45 days after that to, submit a response or an appeal and do all that sort of stuff. So there's, the court system in the United States is not one where you get fast and quick answers. It's like you get a brief win, and then you have to wait 45 or 90 days or something like that, and then there's an appeals process. But that being said, like, generally speaking, given the construct of the Supreme Court, it's like very conservative. And I personally think that the Supreme Court would love to take the SEC down a peg, because they've been on a rager to get rid of sort of like regulatory agency oversight. I don't think the tea leaves read well for the SEC and like carrying on a lot of these sort of like multi-pronged legal battles.
I find it interesting because GBTC is still trading at like a 25% discount. That's why I'm asking. I would have thought the sooner we get to that resolution, I'd kind of expect that to go to parity, right? Surprised. It was like 50, so it's come a long way.
It's gone up dramatically over the course of a lot of these proceedings.
That's still quite a big discount, 25%. Given how close it is potentially to a resolution. I know it's not a done deal. That's obviously why there's still some.
If you're asking me, I have been a believer that I don't think the market is fully pricing in the probability of these ETFs hitting, and I don't think the market is fully pricing in the probability of the wins that the crypto industry is likely to have in the courts over the next few months. So, in fact, if you say like, what's the biggest problem in crypto right now? Like, why has the price of crypto just been kind of like static for the past few months? I think it's because it's just like we're awaiting all this regulatory overhead. And in my mind, if you don't know how the process works, or if you don't follow it, and it takes a little bit of effort to, read through all the briefs and like watch the C-SPAN hearings and all that sort of shit, then like, it's a little confusing. And so you just read a headline, you're like, oh crap, like, anything could go. But I think if you actually like look at legal arguments and understand the way that, the rule of law works in America, we're not talking like coin flips here. Like we're talking, like these are actually reasonably easy for people to understand, like the way that the court is going to judge. Because in most cases we're, it's not like very subtle or nuanced. Like the SEC is trying to do some stuff which is somewhat egregious, to be honest. So it's really only a matter of time, more so than it is a matter of like, will the courts rule in the favor of, people who are currently fighting the SEC over some of this sort of stuff.
Yeah. Like, I feel like, you'll read, people will throw out, obviously in this day and age, we like to look at just like very brief sound bites, and people throw out probabilities like, 65%. But it's like, look, like I'm sure if you ask any three of us, what are the chances of a ETF spot approval over the next 10 years, it would be 100%. Right. But like, the question really comes down to like, what time interval are you talking about? Because this is a massive tide that's moving. It's just working its way through the legal court systems. Yeah.
I would go so far as to say that I think I'd put a 95% delta on a spot ETF getting approved this cycle, meaning before February. So that'll be the crypto market's Christmas gift, which is sort of like, if you think about like, no, I think that right now there's a lot of things going on, in the market, but for all the talk of like the halving and all this sort of stuff, like there is a very clear catalyst that comes in the market, and like the blocks to get there really are like Coinbase versus the SEC, Grayscale versus the SEC, and the approval of a spot Bitcoin ETF. Those things happen. Like that's a very clear catalyst in the market for a good outcome. And so if you're involved in crypto, you should be following these things religiously.
Yeah. And plus, like things like the halving, right? Like that's in prior cycles, Bitcoin was a much larger, it still is obviously the largest market cap out of any cryptocurrency, but it's becoming a smaller, the pie is growing. And so their slice is shrinking too. So like if you look at like just like catalysts for cycles, the halving is definitely will have an impact, but I think it's going to continue to have a diminishing impact on the overall cycles, and things like regulation far outweigh that. Yeah. It's kind of curious, like maybe it's kind of curious to hear your thoughts too, that, as all of this relates, ETFs relate to the cryptocurrency markets. How does that, in trading these type of securities, if let's say in 2 years we have these ETFs running and have several, $1 billion in assets, let's say, how does these flows, how do you think that's going to be impacting? It's probably going to impact it more positive. I'm guessing long-term trends, it's like more easily accessible. So you might see more inflows and outflows, but just like overall, like volatility of the market, do you think it would make it more volatile or less volatile as these ETFs come into the markets?
I think short run, you're going to have a supply shock, because you're going to have, you're going to open up a scarce, like clearly defined asset to retirement funds that just cannot invest in them. So there's a whole universe of people, as you're aware, Robert, that just cannot invest in cryptocurrency right now. And so giving them direct access through an ETF is likely to cause a bit of a supply shock. And I think secondarily, outside of that, it's going to make the costs of trading significantly lower, because rather than paying, a percentage on Coinbase, you can go pay like, a BIP to get into the trade on, E-Trade or Fidelity or wherever else you're going to trade. So like that'll take down costs, and it'll increase adoption, and it'll make the market less volatile, because, the fees will, like the lower the fee basically means like the more stable the liquidity. And so you're not going to see massive like price undulations, although we're not seeing massive price undulations now. And I think most importantly, in my view, if you think that like offshore shady, interests are manipulating the price of Bitcoin, you can do one of two things. You can try to eradicate them and get rid of them until, the market is purely clean, and then you can launch an ETF. Or you just launch the ETF, and the liquidity that will come into the ecosystem will just dwarf whatever bullshit, stuff that's happening, on these like offshore exchanges. And they'll just become, little backwaters where people do shady shit. And I think you've seen that with lots of different things. Like for instance, like just look at the gold market, right? Like if you want to see, market manipulation, look at the silver and gold market pre-ETF, right? It was just like a bunch of fucking bandits going around and stabbing each other left and right. And we're not even talking about like dodgy firms. We're talking about like JP Morgan, who is, has like billions of dollars in fines from spoofing the gold market. Like this is just like stuff that was happening.
Yeah.
So, having ETFs and having accessibility actually ended up being a very good stabilizing force for that market. So I think there's a number of things that will happen to liquidity that will be good. So I think it's good to get it passed and just let the market do its thing.
Interesting. Matt, you were going to say something too, weren't you?
Yeah, more just about, I think this is what Novogratz is trying to position for, is one of the facts of creating an ETF is how do you keep the NAV or the price in line with the thing it's representing. So they usually have creation and redemption baskets, which you have authorized liquidity participants then fill effectively for you to keep that price in line. And so that opens up a pretty big secondary market for, like, a lot of banks do that for like credit ETFs, all kinds of ETFs right now. Opens up a market for other market makers to do that, and it should. I mean, there'll be a lot of vol when those things actually get published and they're trying to fix the price. But then outside of that, I think it's just generally more supply should be good for the market.
Interesting. Yeah, I was. I assume so. That would actually probably put a dampener on some of the shady things you could see in the markets. That's super interesting, guys. Thanks, appreciate it. Moving on the list, I know we also backing over to like the regulatory land, Coinbase versus SEC. There are some amicus briefs that came out. I know, Carlos, you mentioned that there are two of them that you thought were particularly pretty strong in regards to some of the legal briefings and the case for Coinbase versus the SEC.
Yeah, so let's take a little backdrop and just say, like, an amicus brief really, it is what we call like a friend of the court, right? Amici is Latin for friend, right? So effectively what it means is, like, if Coinbase is getting sued by the SEC, Coinbase puts out, a motion to effectively dismiss the case based on certain legal arguments, and interested third-party observers can write these briefs that are, basically saying, as a friend of the court, I'd like to, give you some information or some insight that I'm uniquely qualified to give, that might, sway your, opinion of this. And last Friday was the deadline to submit those amicus briefs, and I think there were 6 that were submitted, mostly by industry groups and that sort of stuff. Andreessen Horowitz, actually put one out as well. But the 2 most interesting ones were, first, Senator Cynthia Lummis from Wyoming. She's a Republican senator from on the Senate Financial Services Committee. She's also the sponsor of the current bill in the Senate to regulate cryptocurrencies. That one is really notable because Coinbase's primary argument as to why they should dismiss the case against them is effectively that, there's ongoing legislation happening, and as a result, that case satisfies the requirements of what the courts have called the major questions doctrine. And the major questions doctrine basically says, if a regulatory agency is seeking to expand their jurisdiction, over some sort of regulatory, oversight, and they have not expressly been given authority by Congress to do so. It is not the purview of the regulatory agency to do that. It is rather the purview of Congress to create legislation. And the most notable recent application of this regulatory doctrine was Biden versus the state of Nebraska, where the state of Nebraska voted to overturn President Joe Biden's alleviation of student loan debt. And the court basically said, Congress has the power of the purse strings. A $460 billion debt jubilee is something that should not just be decided unilaterally by the executive office, but rather that, is a major question that should be satisfied by Congress. And Senator Loomis basically said, if the court has ruled that a $460 billion debt jubilee is a major question that should be ruled on by Congress, then the court should also find a multi-trillion-dollar asset class, which impacts national security, which 16% of all Americans have participated in, and has an impact on our financial system and the US dollar going forward. You should also find that a major question. And you should also find it compelling that both the House and the Senate currently have bills, and that both of those bills, which are currently in the House and Senate, make moot all of the points that the SEC is currently suing Coinbase for, which I thought was really powerful.
It's very powerful. Seriously. Yeah. Seriously. Wow.
The second one that a lot of people, and I think I didn't really think it was that great. I read all of them on Saturday. There's just little 20-page documents, and you strip out the table of contents. It's actually more like 15. So the other one that is an interesting read was that there are basically 6 legal scholars from Yale, University of Chicago, University of Delaware, a few other schools, that put out basically a history of securities laws and why they exist, and basically said, in short, if you rule in favor of the SEC, you will be flying in the face of basically all of the precedent put out by courts over the last 90 years with regards to securities law and the definition of an investment contract.
Mm-hmm.
And these guys aren't crypto advocates. They're not, special interest group. They were just a group of legal scholars who quite literally wrote the book on securities law. From what I understand, if you take a securities law class in law school, one of these 6 gentlemen likely wrote that book. So there's we just feel very strongly that this is a very defined case of overreach, and we need to stand up.
So if there's someone that understands the Howey test, it's they would be the guys, right?
Yeah, and I actually tell you, if you want a good history of sort of the Howey test and what it represents, and sort of how the legal world evolved to that point, I think it's actually a great read. I loved it. I thought it was very informative. I felt like I was sitting in a history lecture. It was fantastic.
Interesting. Yeah, I was kind of curious, when you were looking at these Amicus briefs, were there any briefs, or maybe you came across or didn't, but anything that were written in favor of the SEC's stance?
No.
They have no friends.
They have no friends.
Oh.
No, I mean, okay.
Sure, Elizabeth Warren is a friend of Gary's. Probably she didn't write one.
This is what I'm saying, though, is we're not talking about some very nuanced argument, and it could go either way. If you look at the way that the SEC is interpreting this, it's very obvious that they're kind of making up random shit to kind of get their point across. And I personally think they were kind of hoping no one would notice. My personal view is that they were hoping that all of these crypto firms would fold, pay their fines, and this would just sort of get put in as, this is now precedent because we have all of these people that have accepted this. And I don't think they were expecting nearly the pushback that they got. And now that they are getting pushback, it's getting put to the courts, and the courts are now making decisions on it. And we're finding that the legal grounds under which the SEC was making all of these, regulatory actions were kind of flimsy. So it will take time to get through the system because the courts just don't say you're fucking stupid, get out of here, right? Like it needs to be given due process under the law because that's the way that our court system works. But when it all works through, it will come out in favor. So really the only thing that the SEC has done is kind of cast dispersion on the industry itself, which is bad. And then also delay the time frame in which the US actually has like sensible regulation. But the courts, I think ultimately when you look at the actual facts of the cases they're putting out, in most cases, outside of cases where there's clearly fraudulent activity, which I think the SEC should be going after, and I support them in doing so. But like aside from that, like all of the shit that they're doing is really just, delaying.
It's so interesting, like to understand the backdrop, the backstory of how this stuff plays out really explains a lot of the strategy behind trying to gain influence and regulatory control in Capitol Hill and with these regulations, right? You know, Gary Gensler has interest in becoming, the head of leading up the Treasury, and you have him trying to find these political backers in the Senate, and some of the cases that they put forward, like going out and trying to do this all during the depths of the crypto winter, right? When there was some fraud, and being able to use that and emphasize that to try to gain more leeway and trying to go after others that perhaps were much more fair actors, and see if they could just kind of like blend that all in together in the same thing to be able to push things through. It just didn't come through, and they almost, in some ways, it was a very risky move because they've kind of sowed the seeds for their own discreditment in the market, right? And so it's just it almost becomes a snowball effect as you see more cases go against the SEC. It builds a bigger case for them to lose more and more ground.
Yeah, and I think that from a political perspective, if Joe Biden or whoever comes out of the Democratic, process, assume until, shown otherwise that it will be Joe Biden, right? If he wants to maintain credibility for his second administration, I mean, he's likely going to have to make some changes there because you can't have the SEC just totally lose credibility with the investor community. And it's not just crypto. Like that's the key. Is it's not just crypto. he's pissing off a lot of people, especially with the way they're trying to redo market structure rules in U.S. equity land.
Climate too, right? There's all these climate controls they're trying to put through, and they're like, "What are you doing? Like, what does this have to do with?"
Yeah, like the SEC. SEC does not exist to promote some sort of like ESG or climate agenda, regardless of whether you think that's a good thing. I actually think like Jerome Powell's done a fantastic job about that and be like, no, our mandate is to give price stability and, allow for full employment. And that is it. And that's what you should have. Like the regulatory agency should say, this is the bounds of what I've been allowed to do by, act of Congress. And that's what we are going to do. And I think the SEC has really kind of taken that a step further and said, all right, well, we kind of have an agenda that fits with a political narrative, and we have aspirations beyond being, the head of the SEC. And so therefore we need to sort of, allow these political narratives to play out. And by facilitating those, I put myself in a good situation to, get some future thing down the road. But really all you're doing is you're endangering the American public.
Yeah. And talking of regulation, I'm looking forward to seeing how all this stuff plays out. I think we'll have a very busy fall. Very, very busy fall.
Yeah. So that the Coinbase versus the SEC is going to October 5th, I believe, is the date that the court is going to make not a final judgment, but it's going to decide whether or not to accept Coinbase's argument to dismiss. So basically between like September and October, we're going to get the Grayscale case, and we're going to get some outlook on the Coinbase versus SEC case. And I think once that clears through, you're kind of looking in a place where the SEC has very little to stand on in terms of like further impediment of the crypto industry. So That's, I guess, going back to our earlier question, which is like, that's why I kind of think that the court might actually speed up the process in and of itself.
It's wild turns. Something else too. We had touched on this a little bit in the show notes, but obviously there's been regulation. We've talked about this before about stable coins, and we've seen some interesting developments with large established fintech players like PayPal. Right, they're launching their own stable coin, which is interesting too. You start to see more and more like large established reputable firms coming out and launching their own stable coin, kind of like going into this that I thought that was kind of interesting. I know we talked about that in the show notes.
I think that's pretty big because that finally kind of links bank accounts directly with being able to send stable coins, which is pretty cool because right now you can send them, but you'll probably have to put it on an exchange, convert it back into your fiat. This way you can kind of like flip between the two from the same PayPal integration with those fiat systems, and without obviously having to convert anything or do a transaction on an exchange or pay commission or anything like that. So I think that's pretty cool.
So let's say if I pay you $10 because we split a bill or something, that's still in US dollar, but then I can convert it into a stable coin. Have you tried? I should actually try this later on after the show to see how that works.
You could send me $10. That's fine.
Yeah. Okay. Cool.
I think the idea is that it would allow you to basically carry a stablecoin balance on your Venmo account, and over time. So I guess there's two things to note. The first is that right now they chose to launch it on Ethereum. Massive win for Ethereum, right? What that shows is that every major stablecoin that's currently in the works by fintechs, governments, etc., is choosing to develop that on Ethereum first, and they've stated they will likely make it cross-platform by integrating with Ethereum layer 2s and other types of things. But right now it's Ethereum because it's the most trusted, it's the biggest developer community, and it's the safest security structure of any of the cryptocurrency platforms. So the idea really in my mind is if you're PayPal, what you do is you introduce USDC or PYUSD, excuse me. And right now it's on Ethereum. So that means like if someone makes a transaction, right, like probably going to be just as expensive as if they sent like a normal, wire payment or something like that. But over time, you build that on, layer 2. Let's say you put that on like Coinbase Base or Optimism or something along those lines, put it on Matic. Suddenly you're dealing with people carrying PYUSD balances on their Venmo account or their PayPal account, and they're paying people back and forth. They have the security of the Ethereum ecosystem, and those go through instantaneously and cost like a penny. Like for PayPal, it's probably hella cheaper than managing a bunch of these little tiny micropayments. They must get eaten alive. They must get eaten alive on fees and transaction costs. So it's kind of like a no-brainer for them.
Yeah, and you touched on the Coinbase Base. That was interesting too. Like I know it was like $180 million runway. It's incredible how fast. I think there was a bunch of like some NFTs. I was trying to read up on this. It launched how long ago? It's pretty recent, right?
So it launched a few weeks ago, but they didn't have a bridge set up two-way. So you could put money in, but you couldn't take money out. And then they recently set up the official bridge. You can access it via Coinbase wallets. And the nice thing about that is, they've already got several applications. Like Uniswap is launching, Aave is launching on Coinbase Base.
When are they again? I was trying to get the dates so that I couldn't see.
It was last weekend.
The pools are up.
It's live. Yeah.
Awesome.
So it's all out there. I think really when I think about Coinbase Base launching, it's sort of like we're now dealing in a world where normies or reasonable normies like just launch a Coinbase app, get online, and then start interacting with DeFi applications through Coinbase. and the transaction costs will be nearly instantaneous and very cheap. I don't think that it's going to be like the place where institutions go to do stuff. Meaning, like I think if you're dealing with real world assets, or if I'm BlackRock and I want to tokenize assets, I'm not going to do it on Coinbase Base so I can save a couple pennies. I'm going to do it on the Ethereum mainnet, right? Mm-hmm. But we're talking about consumer applications, basically onboarding the next billion people onto crypto. I think that it's going to be something like this. So I'm actually pretty bullish, and I think if you're a Coinbase investor, you have to love this as well. Coinbase just recently, for the first time in its history, made more money on interest expenses from USDC than they did from exchange fees. And you have to believe that exchange fees throughout time immemorial are going to get compressed. So if you're an investor in Coinbase, you're now seeing a diverse set of revenue streams ranging from a number of products that are not just nicking retail investors for 1% when they buy some Bitcoin. Makes the business a whole hell of a lot more robust. And as this thing grows, it's got potential to be a fantastic revenue generator, and as well, it's going to grow the pie in the crypto universe as well.
Yeah, I remember we were talking about this probably like a year ago, or maybe it's like 9 months ago, just talking about Coinbase and how are they going to get this revenue model, because their fees are so enormous, right? The spreads are just huge, and you can do that in a niche market, but there's no way that this thing is going to have scale. You have increasing competitors coming in; it's going to get compressed, and people are scratching their heads. So how are they going to maintain their profitability and revenue targets? And it's interesting to see how this has evolved.
Yeah, so I think it's good. And the other thing that I think is interesting to note is, when we think about, when people think of the price of cryptocurrency, they often reference the price of Bitcoin, right? But when they think of the technological innovations that are happening in the space and the big announcements of partnerships with TradFi and partnerships with industry and like the growth, almost all of those are announcements that are happening on the Ethereum ecosystem.
Yeah, EVM to the ground, it seems.
Yeah. So to me, I can't think of sort of like a more bullish case over the medium to long run in terms of, what's going to be an asset that is going to extract a lot of rent out of the ecosystem. Right? So think about it. Ethereum already generates about $5 million a day in fees. So if you think of like there are components of an ETH transaction, one just gets burnt, right? Because that's part of the new staking methodology. Something gets burnt, which makes the asset deflationary. So since the merge Ethereum has had a 4% reduction in the supply of Ethereum, that's the equivalent in stock world of like a buyback, right? And that's generally value accretive to the price of the stock. And then it generates fees as well. There's some portion that just is like fees that get allocated, and that's about $5 million a day. And then you look at just like the growth,
right? More people doing that, right?
Yeah. We're still in the early innings, and we're just starting to see an explosion of layer 2s that are going to allow for applications that sort of like allow for everyday usage of Ethereum. So in my mind, Ethereum really is sort of like one of the better plays. Obviously, if you believe in Bitcoin and that's part of your mission, like I own Bitcoin personally. I'm probably not going to sell it anytime soon. But in terms of just like utility on chain and the applicability to have like actual utility. When people ask like, well, what the fuck do you use cryptocurrency for? It's like, yeah, just look what's happening in Ethereum right now. It's actually pretty spectacular.
It's like, what are your thoughts around there was a lot of talk about it, I think in like 2021, the idea of on the fat protocol thesis is like, where does value accrue? Is it going to accrue at the base layer, or is it going to accrue, where does the value accrue? And it seems like still today, obviously layer 2s are still kind of in the early innings and trying to ramp up, but it still seems like value is still accruing onto the Ethereum base. Like that's really where everything is falling to.
Yeah, I 100% agree with you.
Yeah. It's interesting. It's also becoming like a a way of getting diversified exposure to the ecosystem as well, right? Like if you look at Ethereum, it's a space layer. There's all these different apps and layer twos and all these other different solutions that are being placed on top of it. It's still absorbing that and still kind of helping facilitate that. This is like yeah. No, I feel like this is like it's like a brain virus. Whenever I start talking about this stuff, it's so fascinating.
No, I mean, I could make the argument to you right now, and you might call me wrong, but I could make the argument to you right now that if you wanted to replicate the return of a bank, right, in the future, that's just going to be owning an Ethereum node.
Interesting. How, like,
think about,
yeah.
Okay, so a lot of the fundamental like ways that a bank makes money is net interest revenue, right? You get that when you stake. And in some ways, you could make an argument that Ethereum staking rate is actually a pretty good and pure representation of just like the risk-free interest rate in crypto world. And that should effectively be, what banks make money on. And then additionally, you end up with basically transaction fees. And the majority of banks make, fees by extracting rent, by pulling different fees out of all the transactions that move across the world. And that's also effectively what, staking gets you. Yeah.
It's kind of basically like what maximum extractive value is too, right? Like the bank will, the node operator will kind of like realign transactions in order to extract as much value as they can, kind of like what you were just talking about with banks and extracting fees.
And there's going to be ancillary businesses that like go off of that, but I think that you could effectively construct a banking portfolio with certain types of exposures, one of which would be staking, another would be running, MEV. The other one would be, liquidity provisioning across, different like DeFi, protocols. It is interesting to me that you basically see variations on the theme where it's not quite the same thing, but it's at its core a very similar theme, emerging in the DeFi world. And the nice thing is that accrues to the protocol and the people who run and maintain that protocol, rather than to, JP Morgan or, whatever. Which tells me that JP Morgan will probably get into that business. My guess is that, the banks will probably end up owning a large portion of that infrastructure and running their own nodes and running MEV and doing all sorts of other stuff on top of that.
Interesting, but still, but the barriers to entry will have gone down, so it would be more accessible to the general population. Interesting, cool, guys.
Yeah,
very cool, gentlemen. Anything else we want to talk on before we head out for today? I know prices kind of stayed a little bit tight. Not a lot of major movements in the markets.
I mean, aside from conspiracy theories and shit like that,
I mean, that's all that we really. That's all right. That's all I really care about.
No, it's I tweeted out something along the lines of like, can anyone tell me why Bitcoin is trading in like a $300 band? Wrong answers only. I was hoping that I'd get some fun conspiracy theories, but I did not. So, we'll see.
We'll try again. Yeah.
Yeah. My guess is that it's just summer. And
yeah.
No, I mean, well, I've of course I have some conspiracy theories. They're wild, and they're crazy and salacious. But I'll save those for an offline conversation with beers.
All right. We'll try to get some. We'll have I know it's a little too early to do that one on this show. Maybe we'll try the next one. We'll try to do a happy hour, get a beer at Carlos. Start hearing a little more about those.
Exactly. Figure out all the crazy tinfoil hat conspiracy theories that Carlos is out there. The cabal, the elite, they're all running. The lizard people are trying to get your Bitcoin.
Oh my god, I hate it when they do that.
I mean, it makes sense. Like, the lizard people need to get the Bitcoin now, and what they're doing is they're suppressing the price so they can buy more of it, and they're trying to shake you out such that when it's ready to roll, they're sitting on all the Bitcoin and you sold like a sucker.
Yeah, it's a standard lizard incentive
Think about
structure.
it.
Yeah,
Exactly.
So stew on that, guys, ladies and gentlemen. Until
Yeah.
next week. All right. Thank you so much,
All right,
boys.
later.
Cheers,
See you
guys.
later.
Bye.
Bye.